focused on the South Asia growth story and how DBS Bank views Sri Lanka's impact therein. Let me welcome up on stage Mr. Taimur Baig, Managing Director and Chief Economist for DBS Group Research. Please put your hands together to welcome him up on stage.
Hello, everybody. Rob and the Prime Minister set up such high bars. It's hard to follow that act. What I'd like to do is talk about a couple of positive things, and then, as an economist who worries, focus on a couple of challenges that are ahead so that we sort of consider our investment criteria on Sri Lanka with clear eyes. And what is the good? The IMF program is very much on track, and I think the authorities have done a very good job of taking advantage of the program to push through critical long-term return potential type reforms. And the Internal Revenue Act, Inland Revenue Act that was passed last year, I think was a landmark step. And going into 2018, it is very clear for the authorities, and I think we will see a lot of progress there on the tax administration side. Sri Lanka's fiscal challenges are well known. If you look at emerging markets as a group, let's say 30, 40 EM economies out there that tend to be tracked by various investment indices, Sri Lanka's public debt is at the very top, 92 percentile on a EM comparative basis. If you look at Sri Lanka's 2018 gross financing requirements, it's also at the 90th percentile in the EM cohort, about 20% of GDP this year. So very large financing needs, very large public debt. A lot of it is a legacy of the past years, but it is something this government and the subsequent governments have to deal with, which requires revenue mobilization, expenditure rationalization, and reforms of certain areas where there's a lot of waste, for example, energy pricing. And I'm pleased to say that in all of those areas, the authorities have fairly clear roadmaps in place, and we will all be looking closely through the course of 2018, as I said earlier, how the IMF program is used as a fulcrum, if you will, to push through these reforms. So we will be following these issues. The way to characterize, in my view, 2018 and 2019 would be normalization, because 2016 and 2017 were not normal years for Sri Lanka. Natural disasters came one after another. The drought in 16 and the floods in 17 were devastating in terms of agricultural output, in terms of pushing up inflation. Already, you're seeing signs of normalization. If we were having this discussion 6 months ago, the first thing I would be discussing is the fact that inflation is very high. I'm not going to be discussing that today because in the last 3-4 months, we've seen sure signs of disinflation, and we've also seen in a most welcome manner that the central bank is maintaining a fairly tight stance on monetary policy and exchange rate policy. Because mind you, tying in the inflation monetary policy issue with my earlier point of large financing requirement, the casualty in the mix of that tends to be the currency. And Sri Lankan currency has had a history of fairly high degree of pressure and volatility. And in that context, I'm very pleased to note that in the last couple of years, the authorities, particularly the central bank, has taken very strong measures to deepen the exchange rate market. We've seen banking system liquidity on FX transactions pick up markedly. We've seen more two-way movement of the exchange rate, and that's a welcome development. The most South Asian countries' central banks struggle with this issue, whether it's the RBI in India, or the State Bank of Pakistan, or even the Bangladesh Bank. You know, at times of plenty, a lot of money comes in, the Dutch disease type phenomenon, whether the appreciation pressure become an issue. In bad times, a lot of outflow. Reserves are not ever ample in this volatile world, and then it becomes a source of drain, and again, a lot of concern in the exchange market. So to allow for two-way exchange of the movement of the exchange rate and deepen the FX market on a day-to-day liquidity basis, I think are very important positive steps that have taken place in recent years. Now, Sri Lanka sort of stands, in my view, on 3 pillars, an export base, a remittance base, and a tourism base. Now, in all these 3 areas, the country's performance in recent years have been very impressive, and especially on the export side, now that Sri Lanka has access to the SGP facility in Europe, the garment sector, in my view, has been revitalized and has more upside ahead. On tourism, I think most of you in this room have been to Sri Lanka. I mean, what a gloriously beautiful country. And I have to say, I mean, having traveled all over South Asia, the quality of infrastructure on the tourism side is just absolutely outstanding. So I think the PM's hope I think is already a reality, which is whether it's a diaspora or wannabes like Rob, everybody wants to have a home or some sort of a footprint in Sri Lanka. On the remittance side, it's something that we should not ever take for granted. The diaspora is all over the world, and it's an amazing source of foreign exchange, not just for Sri Lanka. When you look at even countries like Pakistan or Bangladesh or India, the hardworking diaspora making up between 5 to 7% of the population outside of the country send back billions of dollars, which is a very strong, sticky source of support. But the world is changing, not in a good way. Protectionism is rife, immigration is becoming more challenging, and even in the Middle East, which has been a major source of remittance flows for South Asian economies, diaspora, things are becoming more and more challenging. We've seen a lot of political unrest in recent years, and I'm afraid that 2018 and 2019 would not lead to many positive breakthroughs there. If anything, things would get worse. So we could work on exports, we can work on tourism. There's very little we can do in terms of promoting remittances in this challenging world. In the past, there were issues about how to make remittance easier, how to improve the skills of laborers, and so on. Those will always help on the margin. But the substance of the matter, that there is this inexhaustible demand of cheap labor in the Middle East, and countries in South Asia would be able to outsource a lot of their labor there, we probably would have to rethink that. It's not going to be that easy going forward. So I go back to my point of 2018 being a critical year. As I said earlier, about 20% of GDP worth of gross financing requirement for Sri Lanka. So Sri Lanka will be coming to the markets, both in the rupee market as well as the dollar market, a lot. And the country will be repeatedly asked tough questions on fiscal, on balance of payments, on exchange rate stability, on inflation control, and overall long-term reform agenda. As a macroeconomist, I sort of look at a 1-2 year horizon. I think most of you here have the luxury of having a longer horizon, and I think the signals on the longer horizon are unquestionably positive. In the near term, global economy might also enter a bit of a challenging phase this year. Already we have seen signs of high volatility, and countries like Sri Lanka do not exist in a vacuum. What happens in the rest of the world will spill over, whether it is through the commodity channel or the FX market volatility channel or capital flow volatility challenge. So it's an interesting year to keep an eye on Sri Lanka. I think this conversation would have been very, very different 6 months ago or 12 months ago. We would have been fixated on short-term challenges of natural disaster and high inflation. We have thankfully moved past that. We can now look at the more substantive longer-term reform agenda. We can certainly now take a deep breath and start asking even harder, longer-term questions. What is the future of the state-owned enterprise sector in Sri Lanka? Are they competitive? Do they need to be restructured? Can some of them be privatized? And I think, again, now that we've moved beyond short-term volatility issues, these questions would come up. Another question. Sri Lanka enjoys some of the best human development indicators in all of Southeast Asia. So whether it is literacy or infant mortality, women's access to health, or overall clean water, electricity availability, in all these areas, Sri Lanka is way above India's and Pakistan's and Bangladesh's of the world. But you cannot take that for granted. Skills-wise, there is definitely a need for upgrading the capacity of the human capital of Sri Lanka, especially if export is going to be a stronger lever of growth going forward. The education system, the skills system, embracing information technology, allowing room for entrepreneurship in those areas would be very important. So in my view, I would be keeping an eye on these issues for the long term, what's happening with the SOEs, what's happening with the labor force, and the quality of human capital. For the short term, I'll keep an eye on the debt dynamic, on the very ambitious fiscal consolidation agenda that has been put in place, whether that is being carried out or not. I will keep an eye on the fact that the FX market has become deeper. Would it become further deep? If there is global FX market volatility, would the two-way movement of the exchange rate continue? I would look at that. And certainly on the tax reform side, I would look to see a major momentum being built up, whether it is on the policy or the administration side. We've had a good start as of last year with the Inland Revenue Act. Are we going to see more and more of those areas or not? And finally, energy price reform. When energy prices are low, it's very easy for authorities to allow for instant adjustment from international to local prices. When it jumps, a real challenge becomes. whether you have the political will to push it at the retail level. Because if you don't, again, the subsidies become large and the balance sheet gets affected. Sri Lanka is not alone in this dilemma. Again, every single South Asian countries have dealt with this in the last 10 years. When oil prices were very high, deficits, subsidies went through the roof. It created a great deal of macroeconomic stress. When prices came down, everybody more or less said that they were going to reform the energy sector. So in the future, subsidies are not the issue. It really passes through to the retail level. I guess this is the year that theory is going to be tested in a very strong manner. So I know that the authorities have a time-bound reform agenda in place for energy price reform, and we'll keep an eye and we'll be constructively optimistic about the outlook. So my 10 minutes are up, so I will now stop and make way for the next speaker. Thank you very much.